Welcome back to the Malaysia Money Matters show. It's the 22nd of January 25, and we've got a ton to get through today from, well, baby booms to potential trade wars. So get ready for a deep dive into Malaysian company news. Then we'll zoom out and see what's making waves internationally and politically.
Yeah, and remember, we're not just skimming the headlines here. We're going to go deep to uncover the potential impact these events could have on you.
Okay, so first up, Alpha IVF Group. They're seeing a 24% jump in profits. Now, what's driving this growth?
Well, a surge in foreign patients, actually. Indonesian and Chinese couples are increasingly choosing Malaysia for fertility treatments.
Oh, interesting.
Yeah, it seems to be a growing trend in medical tourism for the country.
So Alpha IVF is really capitalizing on this trend. They're opening new centers in the Philippines and Indonesia.
Exactly.
Okay, something to keep an eye on for sure, especially if you're thinking about investing in healthcare or related sectors. Now, let's switch gears to CIMB Thai Bank. They posted a, wait for it, 78% surge in net profits. That sounds amazing, right?
It is pretty impressive, but there's a bit of a catch. While investment gains and lower credit losses contributed to their success, their interest expenses are rising faster than their income.
Okay, hold on. So what does that mean for CIMB Group overall? And should we be worried about rising interest rates affecting our own investments?
That's a great question. Basically, it means that the bank is paying more to borrow money than it's earning from lending it out, and that can squeeze profits in the long run.
Okay.
And yeah, to answer your second question, rising interest rates are a concern for everyone. They can impact everything from loan repayments to returns on savings and investments.
So what do we do?
Well, staying informed and maybe even reviewing your portfolio with a financial advisor are good first steps.
All right, good advice. Let's move on to some brighter news. KIP Real Estate Investment Trust, or REIT, as it's more commonly known, is riding high on the success of its malls. Their acquisition of Deephol's Mall in Cyberjaya and TF Value Hypermarket in Perak contributed to a nearly 29% increase in net property income.
That is good news. This could actually signal a revival in the retail sector.
Really?
Possibly. And for those of you unfamiliar with REITs, they're companies that own and operate income-generating real estate, like malls, offices, or apartments. They can be a solid investment option, but it's super important to research carefully and understand the risks.
Good point. Now let's talk about KTI Landmark. They're teaming up with a Sabah government agency to develop a massive, affordable housing project in Kota Kinabalu. We're talking about 5,000 homes.
Wow, that's ambitious.
Yeah.
This is a significant development because it could indicate a shift towards addressing the need for affordable housing in Malaysia.
Right.
I think it'll be interesting to see how this project unfolds and if it influences property prices in the area.
Definitely. Okay, switching gears a bit. Keyfield International just set a record by installing Malaysia's largest solar PV system on an offshore vessel.
Oh, wow.
Yeah, they're reducing fuel consumption, cutting emissions, basically setting an example for the entire maritime industry.
It's great to see companies embracing sustainability. I think this also highlights the growing potential for investment in green technologies, especially in the oil and gas sector.
Okay, so let's look at the automotive industry for a sec. The Malaysian Automotive Association, or MAA, predicts car sales to dip slightly this year after hitting record highs in 2024, although they're still expecting strong demand, particularly for electric vehicles.
Makes sense with rising interest rates and inflation. It can definitely dampen people's enthusiasm for big purchases like cars.
Yeah, it's all about finding that balance between what you want and what you can actually afford. On a more positive note, Malaysia Airports Holdings, or MHB, as it's better known, celebrated the addition of 12 new airlines and 24 new destinations in 2024. KLIA is buzzing with new international carriers, and regional airports are seeing more direct flights to some pretty exciting locations.
This points to Malaysia's growing prominence as a travel hub, which has huge implications for tourism and the overall economy. Think about it. The jobs created, the boost to local businesses, and the overall image of Malaysia on the world stage.
Okay, let's zoom in on the insurance sector now. MNRB Holdings, a major player in reinsurance and Islamic insurance, saw a 37% jump in net profits, mainly due to higher insurance service earnings.
This raises an interesting question. Does this signal a healthy and growing insurance market in Malaysia? And if so, what does it mean for us, the consumers and investors?
Good question. I mean, on the one hand, it could mean higher premiums, right? But on the other hand, it could also signal some good investment opportunities in the sector. It's
Exactly.
all about perspective.
It's all about understanding the different angles and making informed decisions.
Right. Now let's talk about MRCB. They're rumored to have won the bid for the massive Ipoh Railway Station Integrated Development Plan project, or IRIDE for short. They have a pretty solid track record with these sorts of developments, with successful transit-oriented developments like KL Central and Penang Central.
I see where this is going.
Yeah, so what does this latest project mean for Ipoh's future? Could this be a model for other Malaysian cities looking to revamp their transportation hubs?
It's definitely possible. I mean, MRCB's expertise in creating integrated transportation hubs could be a total game changer for IPUS. Think about the convenience for commuters, the potential for economic growth around those hubs, and the overall modernization of the city.
Yeah, sounds exciting. Okay, let's move on to Malaysia Group. They're doubling down on their winning strategy in Sentul. By snapping up prime land for their third residential development in the area, area, as it's called, will offer affordable apartments starting from RM 498,000.
So is Central becoming a hotspot for property investment, and is area a good option?
Well, I think Malaysia Group's confidence in Sentul certainly suggests some potential there. But, as always, I encourage our listeners to do their research. Consider things like location, amenities, and future development plans before jumping into any investment.
Absolutely. Due diligence is key.
Okay, now let's dive into the world of technology. FSBM Holdings is partnering with some tech companies to launch HMLV.ai. It's an AI-powered platform for the fabricated metal industry.
Oh, interesting.
Yeah, this sounds like it could be a game changer.
Tell me more.
Well, this platform promises to streamline procurement, enhance efficiency, and boost competitiveness in the Southeast Asian market.
This is a prime example of how AI is transforming traditional industries.
Absolutely. And speaking of transforming things, Rich Tech Digital, a leading provider of electronic reload and bill payment services, is launching its IPO on the ACE market.
Right. An IPO, or initial public offering, is basically when a company offers shares of its stock to the public for the first time. It's a way for companies to raise capital and for investors to potentially get in on the ground floor of a growing company.
So is this a promising investment opportunity?
Oh.
And what does this IPO say about the growth of digital payments in Malaysia?
Well, they're aiming to raise RM 20 million to fuel expansion and enhance their digital platforms. So that suggests a strong belief in the future of digital payments in Malaysia. But of course, any investment carries risk. So it's crucial to do your research before making any decisions.
Always good advice. Now let's switch gears for a sec to a potentially challenging issue. The National Water Services Commission, or SPAN, is raising concerns about data centers' heavy reliance on potable water.
That's interesting.
Yeah, they're calling for a shift towards alternative water sources to ensure long-term water security.
So is this a wake-up call for the data center industry? What can they do to balance technological advancement with environmental sustainability?
Well, it's definitely a clear signal that the industry needs to prioritize sustainable practices. Things like exploring alternative water sources, improving water efficiency, even redesigning cooling systems are potential solutions.
It's all about finding that sweet spot where technology and sustainability go hand in hand.
Absolutely. Now let's shift our focus to the international scene.
And the big news internationally is Donald Trump is back as U.S. president. He's already making waves with his tariff policies, holding off on China for now. But he's threatened 25% tariffs on goods from Canada and Mexico.
25%. Wow, that's a huge jump. Economists are already warning that a trade war could significantly impact Malaysia's economy. So what does this mean for us? How might Trump's, well, let's be honest, unpredictable moves affect our investments and the Malaysian ringgit?
Yeah, it's definitely something to keep an eye on. A trade war with major economies like Canada and Mexico could disrupt global supply chains, which could lead to higher prices for imported goods here in Malaysia. It could also weaken the ringgit if investors lose confidence in the region's economic stability.
Okay, so should we be worried?
I'd say it's definitely something to monitor closely. The situation is pretty fluid, and the outcome depends on a lot of factors. But as always, diversifying your investments and staying informed are good strategies in times of uncertainty.
Solid advice. Okay, let's shift our focus to Europe now. The European Central Bank is signaling more interest rate cuts to try and stimulate the struggling Eurozone economy.
Right, and this comes amid weakening investor confidence in Germany, despite the upcoming election. The ECB's move really highlights how interconnected the global economy is. What happens in one region can have ripple effects across the world.
So how might this impact Malaysia?
Well, lower interest rates in Europe could make the euro weaker compared to the ringgit, potentially affecting our exports to the Eurozone. It could also influence global investor sentiment, which in turn can impact investment flows into emerging markets like Malaysia.
Got it. Now let's zoom in on the UK. They're dealing with a bit of an economic puzzle. Employment is dropping after recent tax hikes. But at the same time, wage growth is accelerating, which could push up inflation.
It's a tricky situation for the Bank of England. They're facing a tough decision on whether to continue cutting interest rates to boost employment or raise them to try and control inflation.
What can we learn from the UK's experience?
Well, I think it highlights the challenges of managing a complex economy. It reminds us that there's often a trade-off between different economic goals, and finding the right balance is crucial. It also emphasizes the importance of sound fiscal policies and prudent financial management, both for governments and individuals.
Well said. Okay, back here in Malaysia, there's been a lot of buzz about former Prime Minister Mahathir Mohamed's sons, Mogzani and Mirzan. They recently declared a combined RM 1.2 billion in assets to the MACC.
Yeah, this is definitely raising some eyebrows. While investigations are ongoing, this declaration has sparked public interest and scrutiny. It really highlights the importance of transparency and accountability, especially for those in positions of power or influence.
Agreed. Okay, let's shift our attention to Johor. ANZ research predicts that the Johor-Singapore Special Economic Zone will boost Johor's GDP to a whopping RM 250 billion by 2030.
Wow, that's a bold prediction. If it materializes, it could propel Johor to high-income status. The influx of high-value projects, particularly in the tech and manufacturing sectors, is a key driver behind this projected growth.
RM 250 billion, that's massive. So what does this mean for people in Johor? Is this a sign that we should all be packing our bags and heading south?
Well, this potential economic boom could create numerous job opportunities and attract investments to Johor. It could also lead to infrastructure improvements and a higher standard of living. But whether or not you should move depends on your individual circumstances and investment goals. I'd say it's essential to do your research thoroughly before making any big decisions.
Great point. Now let's talk about Pansar. It's a construction company that just secured a massive RM 478 million highway construction contract in Sarawak. What's interesting is that that's actually more than the company's current market capitalization.
That is a significant win for Pansar. It underscores the ongoing infrastructure development happening in Sarawak. These large-scale projects often have a ripple effect on the local economy, creating jobs and boosting demand for various goods and services.
Right, it's like a chain reaction of economic activity. Now let's turn our attention to Press Metal Aluminium Holdings. Hong Leong Investment Bank expects their fourth quarter earning to be stellar, driven by high alumina prices and a strong contribution from their associate, PT Bintan.
This is positive news for press metal investors. The company seems well positioned to benefit from favorable market conditions and strategic partnerships.
Speaking of strategic partnerships, Battersea Power Station in London, a project with significant Malaysian investment, saw retail sales surge by 13.4% in November and December.
That's encouraging news for the Malaysian investors involved. The increased footfall and sales, especially during the festive season, suggests that Battersea Power Station is gaining traction as a shopping destination. It's a good example of Malaysian investments making a mark on the international stage.
That's great to hear. But now for a bit of a reality check. The ASEAN Plus 3 Macroeconomic Research Office, or AMRO, is sounding the alarm about potential trade wars with the U.S. They predict that retaliatory tariffs could slash the region's economic growth by up to 2%.
Yeah, that's a serious warning. It highlights how interconnected global trade really is. A trade war with the U.S. could have significant repercussions for Southeast Asia, including Malaysia, of course.
So what can be done to mitigate this risk?
Well, strengthening regional cooperation, diversifying trade partners, and promoting a rules-based global trading system are crucial steps to navigating these turbulent waters.
Excellent point. Now for some good news on the home front. Section 2 of the West Coast Expressway opened just last night, and it's toll-free for a whole month.
Oh, that's fantastic news for commuters and businesses in the Klang Valley. Improved connectivity, reduced travel time, increased accessibility. These things can significantly impact economic activity and quality of life.
Absolutely. Infrastructure development is key to progress. Now, here's some interesting news for those following the REIT market. YNH Property is selling Aeon Mall Seri Manjung to Sunway REIT for RM 138 million.
This transaction highlights the dynamism of the Malaysian REIT market. For Sunway REIT, this acquisition expands their portfolio and strengthens their position as a major player in the industry.
Okay, let's move on to some developments in IPO. Tad Hill Holdings has secured a RM $58 million contract to build a massive commercial complex there.
This is positive news for IPO's economy. Large-scale construction projects like this create jobs, attract businesses, and can revitalize urban areas. It'll be interesting to see how this complex contributes to IPO's growth and development.
Okay, back to the U.S. now. President Trump has made another controversial move. He's ordered the removal of policies and subsidies that favor electric vehicles.
This decision has sparked a lot of debate. Critics argue that it will hinder the adoption of cleaner transportation, while supporters believe it will level the playing field for the automotive industry. The long-term impact on the electric vehicle market remains to be seen.
Yeah, definitely a lot to unpack there. Finally, let's take a look at the U.S. bond market. Yields fell after investors breathed a sigh of relief that Trump didn't immediately impose tariffs on China.
This market reaction highlights how sensitive global markets are to Trump's trade policies. While the immediate threat of tariffs on China may have eased, the situation remains uncertain, and investors are likely to remain cautious.
It seems like global markets are in for a wild ride with Trump back in the White House and, those unpredictable trade policies.
Yeah, it's definitely a time for businesses and investors to, well, stay agile, stay informed, adapt quickly. I think that's the key.
So true. Well, we've covered a ton of ground today, from booming businesses here in Malaysia to potential trade wars and the ever-present need for, sustainable practices. It's a lot to digest, but I think that's what makes these deep dives so interesting. There's always something new to learn, something to think about.
I totally agree. That news about SPAN and the data center's water usage really got me thinking. It highlights that challenge, balancing technological advancement with environmental responsibility.
Yeah, for sure. Progress shouldn't come at the cost of our planet. We need to find innovative solutions, right? Solutions that allow us to embrace technology but still protect our natural resources.
Absolutely. On a more positive note, I'm really intrigued by that Johor-Singapore Special Economic Zone, RM 250 billion in GDP by 2030. If those projections are even close to accurate, that could be a game changer for the region.
Yeah, I agree. Definitely something to watch. Could create so many opportunities for businesses and individuals down in Johor.
It's exciting to think about the possibilities. Well, today's deep dive has given us plenty to ponder, that's for sure. The potential for growth, the challenges, the need for sustainability.
It has. We've covered a wide range of topics today, and hopefully our listeners are feeling more informed and equipped to make, smarter decisions, right? Both financially and in their daily lives.
That's the goal. And remember, staying informed is a journey, not a destination.
Absolutely. That's why we always encourage you to subscribe to the Malaysia Money Matters podcast for regular deep dives into the latest news and how it could impact your financial well-being. We're here to help you make sense of it all.
Until next time, stay curious, stay informed, and thanks for joining us.
And as always, thanks for diving deep with us on the Malaysia Money Matters show. Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.